Pinterest stock is down over 65% off its highs reached in 2021. That has a lot of investors asking if the stock is undervalued at current prices. I'm going to attempt to answer that question in this video by doing a discounted cash flow valuation of Pinterest to determine what I feel is a fair price for Pinterest stock. And if that fair price is above the current market price, that means you're getting an undervalued opportunity with Pinterest shares. So let's get into the calculations.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so three of the inputs I'm going to need to make this evaluation is the market cap for Pinterest at $20.84 billion, the cash and equivalents balance at $1.036 billion, and its long-term debt, which the company has zero. Then I need its number of shares outstanding at 695.48 million. And I also need Wall Street estimates of Pinterest free cash flow over the next 5 years. For 2024, Wall Street analysts following Pinterest stock expect it will deliver $950 million in free cash flow. In 2025, it's expected to grow to $1.2 billion, then to $1.46 billion in 2026, before jumping to $1.85 billion in 2027 and $2.21 billion in 2028. One of the reasons why, or I should say two of the reasons why analysts on Wall Street expect Pinterest to increase free cash flow is it's doing a better job monetizing its international user base. And secondly, it's increasing engagement with existing users, making the content more shoppable, which is more interesting for marketers on the platform. Those two catalysts are boosting expectations for Pinterest's free cash flow in 2024 and beyond. I also need the company's beta, which according to Yahoo Finance stands at 1.02. Remember, a beta of 1 means that the company's stock price movement is equal to the movement of the S&P 500 index. In other words, if the S&P 500 index moves by 1%, a beta of 1 would mean that the stock price would move by 1%. So Pinterest beta of 1.02 is roughly equivalent to the movement of the S&P 500 index, which means this stock is relatively not risky compared to the S&P 500 index. I've done some companies where the beta approaches 2, 3, and even 4, meaning these stocks are 2, 3, or 4 times as risky as the S&P 500 index. For investors who are uncomfortable seeing their investment value fluctuate by large magnitude, a company with a lower beta is a better fit for you. All right, so now that we have all the inputs to our calculation, I can share with you my valuation model for Pinterest. And this is as of December 17th, 2024. Starting with the company's free cash flow in 2024, which is estimated at $950 million, rising all the way to $2.21 billion. I got all of these estimates from 2024 to 2028 from the Wall Street analysts that are following Pinterest stock. From 2029 to 2034, I have the company's free cash flow growing at a transition rate of 11.75%. The way I chose 11.75% is by taking the free cash flow estimates from Wall Street from 2024 and 2028 and deriving the growth rate that's expected during these next 4 years. And that growth rate is 23.5% between 2024 and 2028. So then from 2029 to 2034, what I did is I took the short-term growth rate and reduced it by half. And taking half of that growth rate from 2029 to 2034, because companies usually slow down the increases in free cash flow as they grow larger. And companies don't abruptly slow down their free cash flow growth, but they transition to a slower growth rate eventually. If they reach a large enough size, these companies grow at the rate of the economy. They don't grow faster than the economy. They don't grow slower than the economy. They maintain the growth rate of the economy because they stop gaining market share. Their market share gains are completed, and from that point onward, they are increasing at the rate of the economy as population grows, as productivity grows, as consumer spending grows. That's the rate at which the company's free cash flow grows. And so from 2029 to 2034, I have the company growing at 11.75%. And then from 2035 onward, I expect the company to reach its perpetuity growth rate of just 5%, which is the nominal growth rate of the economies, the developed economies that Pinterest will be operating in by that time. Remember, it's not just a US based company. The company has more monthly active users internationally than it does domestically. It's just right now, most of its revenue does come from domestic users because the average revenue per user is higher from the US and Canada compared to international segments. But international segments' average revenue per user is growing much faster than the United States and Canada. So there will be a closing of that gap between its US revenue and international revenue over the next decade. So these are all future cash flows. We need to discount them back to today because we want to know what the company is worth today, not what the company could be worth 10 years from now. So to discount those back to today, I need a weighted average cost of capital, which I'm using 10.18%, combining the cost of debt at 7.5%. Even though the company has zero debt, I'm assuming that eventually they will want to have some debt. Not because they need it, but because the cost of debt is lower than the cost of equity. And so I assume that, in future years, they'll take out some debt to balance their capital structure. And I have a modest increase here, 5% debt, 95% equity. And I'm using a market risk premium of 6%, a risk-free rate of 4.2%, and the beta of 1.02. That's how I get the weighted average cost of capital of 10.18. So when I discount all of those cash flows back to today, utilizing the weighted average cost of capital, I get a value of operations of all of the cash flow expected in the future from Pinterest at $47.7 billion. To this total, I add the company's cash balance, and that brings me to a value of equity of $48.768 billion. But I want to know the price per share. And so I divide that by the number of shares outstanding, which brings me to an intrinsic value per share of $70.12 for Pinterest. Now that's more than double the current market price of $30.75, which signals that yes, indeed, Pinterest shares are undervalued. And yes, indeed, this is an undervalued growth stock. But remember, I used several estimates and assumptions to make this calculation. So you might feel like some of my numbers were too high or too low. So please conduct your own due diligence before making any decisions based on this research. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.